Welcome, everybody. Welcome to ZionCapitalFX. My name is Chance. It is April 6th, 2023. It is Maundy Thursday, and I've been on night shift this whole week, and so I haven't really been able to trade a whole lot. At times like this, I like to go back in historical data and do some back testing because I haven't been in the markets. I like to go back and then try to just test out my strategy and see how it would have performed for that day or all the days that I wasn't able to trade. This is a way to excuse me. This is a way. Sorry, pizza is coming up. This is a way to keep honing the process and keep your craft at its peak performance. So what we're going to do is I'm going to share my screen and we're going to do some back testing on TradingView, and here we go. So this is GJ, Great British Pound to Japanese Yen. This is currently set at let's see, right at 150, 2 o'clock. So London Session Market Open. And let's see here. We're going to go forward. This is on the 5-minute time frame. I like to wait for the 1 hour to pass by before I start looking at trades. Let's see here. Keep an eye on this. Let's see, it's going down. It's establishing the DR and IDR range. Looks like it's setting up a fib play, a Fibonacci. I'm going to zoom down to the 1 minute. There's times that I'll break my rule and not wait for that first hour to form. I'll actually get in a trade a little early if all the conditions are right. I can see right now that price was going up and it made a higher low, and then it broke this structure right here. Let's see. Broke that structure right there. It closed lower. Something to note that I'm seeing, there's this healthy imbalance on the 1 minute. This is looking like a fib play, so it came down, broke. Anytime there's a break of structure, this is a break of structure, we're anticipating a retracement. I see this imbalance on the 1 minute. I've got this rectangle to signify it. So what I'm going to do is I'm going to see if I'm going to put a fib here. I'm going to see if it rejects at any of my key levels that I like, so like the 0.5, 0.618. But this imbalance right here, this bearish candle, that sticks out to me like a sore thumb. So I've got that there just in case. It's all about patience and, trusting the process. So let's see what's going on here. It rejected off the 0.5, but then it's coming back up. Oh, that rejected the 618, like perfect. Huh. What to do. Let's keep going. Let's go. Ooh. That could be a confirmation candle right there to go short and continue this fib play. Something that I've been tweaking with and adding to my strategy is I have the RSI oscillator down here. It's the relative strength index. It's more of a momentum indicator. And I'm testing on whether or not to use it as like a trigger for when to enter a trade. I look at price action. I look at what price is telling me, and for the most part, that's all I need to create a narrative for this trade, to create the story of why I want to trade. But I'm at the point where I want to filter as many bad trades out of my strategy. I'm trying to increase my win rate. So I'm in the process of revising my strategy and implementing or tweaking the process just a little bit. So here's the overall rundown. I'm not going to enter this trade. Every being in my fiber wants me to enter short right here. This is what I really want to do because it rejected off the 618. I want to put my stop here, and I want to go to like a 1 to 2 R. So I'm gonna risk 1% for 2%. I really want to do that like right now, but the RSI is still high. So look here, this straight line all the way across here in this oscillator, that's the 50%. If the RSI is above that, then it's still bullish momentum. So it could still have some momentum to go up. And if I was looking for a buy trade, as long as this line was at the 50% or crossed above it, that would be my confirmation to enter a long. If it was at the line or below it, that'd be my confirmation to enter a sell. So I would tell you right now, I would take this trade 9 out of 10 times. I would enter short here, but because I'm kind of tweaking my process, the RSI hasn't made it to that line just yet. I also know that there's this imbalance that's like screaming at me. I'm kind of interested to see what happens. So I'm going to put this right. Oh, actually, I'm going to shift this. I'm not going to enter that trade like how I usually would, but I'm going to put it to the side, see how it would have done. And let's just see what else happens. Oh man, did I mess up? Should I have gotten in right there? I don't know. All right. Ooh, not. Oh, okay. It's going up. Not really sure what it's doing. It's kind of, oh, going up. Yep, it's heading for that imbalance. So, huh. What do we got going on here? It doesn't know what it wants to do. That's what it's telling me. Huh. All right, let's bring this trade back over here. If I would have gotten in that trade, that would have been a loss in a matter of 12 minutes. The RSI never went down to this line and crossed below it. Interesting. So this is all part of the backtesting trade journals, getting hard data to refine your strategy and your skill set. So let's see what happens. Let's see what it does when it hits that imbalance. Hit that bottom end of the imbalance, hit almost 50% of the imbalance, and now it's coming down. Interesting. So right here, this candle, this bearish candle, it hit the RSI line, the 50%. If I were to tweak my process like how I explained it earlier, now would be the time to go in short right here. So I'm going to move this right there below that bearish candle. I'm going to put my stop loss just above that imbalance. So just on the other side of that imbalance, give this a healthy stop loss to let it breathe. I'm going to go target this EMA. So down here, here's the 50 EMA. This is the 50 EMA according to a 15-minute chart. And I'm going to target that as my take profit. It's also in line with the Fibonacci, the third extension, the lowest extension, the 0.618. So if I were to gotten in right here, I'd be risking 1% for 2.5%. Let's put that in perspective. If I had a $200,000 account, 2.5% would be for $5,000, right? So I'm risking $2,000 for $5,000 if I had a $200,000 account. Or, a $100,000 account, that's $2,500. You're risking 1% for $2,500 gain. That's pretty good. Let's see how this plays out. So again, it hit that imbalance. There's a confluence that it rejected off that imbalance that this left behind that I saw earlier. We're rejecting off the 0.786 fib, which is another key level. We've got confirmation with the RSI down here. It's at that 50% level. It could be on its way plunging down. I have no idea. The only thing that this kind of goes against my strategy as of right now is I haven't gotten a confirmation whether the market wants to go bullish or bearish. I usually wait for a price to close below or above here to figure out what kind of trade I'm looking for, whether I'm looking for longs or buys. But this fib play was very pronounced, and so was this imbalance. I'm going to break that rule, and I can't. My strategy allows me to do so, my trading plan. And so I've got like 3 or 4 confluences right here to enter this trade, and I'm gonna go ahead and do it. So I'm in, it's going down, and it just keeps melting. I'll be darned. It hit that 50 EMA like perfectly. The EMAs act like, especially like the 50, 100, 200, when price is close towards those, they act like magnets. Like they just attract price to come back down or come back to wherever that moving average is. And that's exactly what happened here. Hit, the 2.5% within, let's see here, 18 minutes of placing the trade. Pretty good. And so I didn't trade this real life in the market. I was going back. I wanted to see how I would have done in the market. This helps build confidence. This helps boost some esteem in the market. Just trying to refine your edge, refine your process. It's doing stuff like this that separates the guys that just do random trading willy-nilly, don't really know what they're doing, to guys that want to make this, their livelihood, or want to be a professional trader, or day trader. This is how you separate the boys from the men, right? Putting in the time and getting that muscle memory of seeing the markets and just seeing price action play out. So everything lined up. The RSI tweak, that really, you seen how it played out, waiting for that RSI to line up for the trigger, when to enter the trade. I had price action building the whole narrative to this. I saw that imbalance from the get-go, seeing this fib play come out, this break of structure, anticipating the retracement. A lot of guys, they see, they think, oh, it's a breakout. And then once price gets here, they enter a sell. Well, it went right up. It would have went against you. I would have gotten take it out. Every fiber of my being wanted to get in short right here in this area. But again, I'm trying to figure out a way to filter out bad trades, and the RSI allowed me to do that here. So this is a 2.5% gain, like within 18 minutes. You can't ask for a better day. A trade like that, think of it this way. If I was trading full time, 18-minute workday, made the profit for the day. Really, it was let's see here. Hour and 31 minutes from the time seeing market open to getting in the trade to exiting the trade. I was an hour and 31 minutes. That's crazy. I'd love to have a work day that only lasted an hour and 31 minutes. If I had the day off and I traded this, that hit, it'd be 3:31 a.m. for me. I'd probably roll back in bed or start cooking some breakfast and getting the coffee ready for the wife and kids. So there you have it. This is part of the process to becoming consistently profitable and becoming a trader. This right here, this is the hood time, people. This is how you do it right here. So that's just a glimpse of how I backtest. There's better ways of doing it, but this is what works for me, and I get good results from it. And anyway, there you have it. So if this video was helpful, please give me a thumbs up, give it a like. Any questions, comments, concerns, put them in the comments. If you got any questions, I'm happy to answer them. And thank you, everybody. Thanks for watching, and I will see you next time. And remember, stay safe in the markets, and happy Easter, everybody.